So I'll start the recording now here. All right. So we cover this stuff. This is your note file, and it covers all this material. Now we're going into the first topic of the day, which is the case analysis framework. And it consists of, in the IRAC in the US, I put a silent F there, and FILAC in the Australian law schools. Similar points, actually. Broad overview over here. F is for facts. Okay, it is not present in the US framework, but we'll put it there. And then we have I is for issues. I'll explain what it is. And then you have L in Australia is for legal principles to be applied to this case. Okay, here you can see. Okay, which we'll talk about, which will be basically statutes, precedents, and texts. Okay, so here we're talking about a common law system. Okay, so common law jurisdictions. Jurisdiction is a big word, so we'll use this and. All right, so. All right, so common law system. So obviously in common law system, when we talk about legal principles, we'll be talking about statutes, precedents, text, as in well-known law books, etc. You will see in some of the contract cases, they'll be referring to law books, texts actually, textbooks on contract law, etc. So legal principles in the U.S. system, this is called R for rules. Rules is has the same meaning essentially. That what are the legal principles or what are the legal rules that should apply in this particular situation, and then you have the application of the rules. Okay, which is the same in both. I and A are the same in both. And this is where you have matters like formalism and realism, jurisprudential philosophies like these two, where this is where these two become important because it affects the decision in the case. Okay, I'll give you an example later on with the VODAFONE case. So this is important. This is where all the stuff you learned about formalism and realism comes into play, the application state, then you have the conclusion. So this is generally a little redundant because once you know the principles, once you've seen the principles that the court is applying, and once you've gone through the judgment, the part of the judgment that, or you yourself have analyzed a case without reading the judgment, if it's a hypothetical case, and or there's a case that is actually in session in the courts and has not yet led to a final judgment. So here in these cases, once you've gone through this L or legal principles or rules, and then the application of these principles to the facts of this case, then the answer is pretty much clear. The conclusion is pretty clear, actually. So this is just nothing but a statement of the conclusion. Like you in maths proofs, your right hand is proved at the end, but it's already proved, even if you didn't like it. Even if you didn't write it, it's clear that you have successfully proved it. So therefore, the conclusion is a bit of a formality, but it is a part of the framework, so we have to state it here. Okay. So these are basically all the provenance is a new word that you can learn. Provenance refers to the source. So common law systems, the common element of the common law system. It's not the part that talks, that relates to the word common, but the all common law systems like Australia, USA, India, New Zealand, etc., the UK, they all have one provenance, which is the common source of all that is the English common law that was developed in the law courts in England, starting from like kind of early 12th century onwards. So that's why they're called common law systems, because they're derived from English common law. All right, so this is where the broad out discussion is, and then let's look at the details of that. So when you're talking about facts, okay, so this is just the document version of the previous set of right, and then the conclusion. Okay. All right, the conclusion we don't really need to worry about, so it is so obvious. All right, so here you have material facts. Material facts obviously are, you will read from the Glenville-Williams article. These are basically facts that have legal salience, all right? So legal salience means that if there is a case of reckless driving, then the fact that the driver who's being charged with reckless driving, the fact that he had blue eyes or he was wearing a brown shirt, these things are not really of any legal salience, okay? Because they are not likely to affect the judgment on the facts. So therefore, these are not material facts, or these are not legally salient facts. Okay, what is legally salient is that he was driving in a reckless manner. Okay, that is what is legally salient. So this is what we mean by material facts. And then, of course, you have the issues, okay, the issues are basically the point of contention arising from the facts, okay, which is this includes issues referred for decisions by lower courts. So certain cases, certain judgments that you might read are actually judgments on appeal. They're judgments of higher courts, like Supreme Court, etc., and they're on appeal. And some of those appeals may have been not really appeals, but kind of references from the lower courts by high courts can refer the court case to a Supreme Court for a decision on a point of law. And so this, when we talk about issues, this would include the issues that the High Court has framed for discussion. Okay? So you'll see that. And even in the European system and the EU law, you have a system where the national courts can refer cases actually for the consideration of the Court of Justice of the European Union. And these are on points of interpretation with respect to EU law. These are all going to be part of the issues of a particular case. Right? What is the point of contention? It means essentially what is the dispute about. Okay, so if there is a dispute between the income tax department and a particular assessee, where the assessee is seeking to claim some amount of expenditure, let's say maybe 100 million rupees, they want to claim as a revenue expense, and therefore they want to be able to use that as kind of a deduction in computing their taxable income. So this is the aspect you'll come across when you do the tax cases, that in tax law, the revenue expenses are deductible in computing your taxable income, but capital expenses are not deductible. So this is usually a common point of contention in the tax cases, tax disputes. So the revenue will want to show, the revenue that is basically income, the tax department will want to show that a particular expense is a capital expense and therefore should not be allowed as a deduction. Whereas the assessee will try to show, no, this is not a capital expense, it's a revenue expense. So the issue in the case will be, point of contention is that, so issue will be stated as whether the item in 100 billion rupees under debate is a revenue expense or a capital expense. What is the true nature of that expense? That will be the statement of the issue, and that's the point of contention. And then you have, of course, the legal principles or rules. Okay. Here you see what is relevant to that particular case. So we would not talk, obviously, if we are talking about a tax case, okay, then we would probably not bring in, most likely, because unless there is an aspect of that involved, we will not bring in, let's say, Hindu Marriage Act, okay, or any kind of rules on divorce, etc., judgments on divorce, division of property on divorce, etc., because they're not really applicable to the particular situation that we have, right? So therefore, when you talk about legal principles or rules, it's a matter of, in this particular part of the judgment, okay, or in your own analysis, in this part of the analysis, you should identify the specific legal principles, down to the acts and the subsections of the acts that apply to the resolution of this dispute, okay? So what are the particular principles that are applicable? And then you will, in the next section, you have the question of application, okay? That is, you take these principles and you apply them to the facts of the case, right? Then you go on an issue by issue, because there may be multiple issues in a particular case, right? And then you apply those, and that's where it becomes pretty clear which way the conclusion is going to come out, okay? What is going to be the tilt of the conclusion. So that's why I said this part is kind of a formality here, right? The conclusion part. Okay? So this is what it is. This is what it refers to. So you'll get a better idea as we go through this, and I'll point out as we go through certain judgments. I'll point out, but this is an important framework to keep in mind in analyzing cases, because it helps you to bring structure to what may sometimes seem to be kind of an unstructured situation, in terms of, especially when looking at a long judgment. Right. Here you have just one more point I have to add, a very important point actually. We had a long discussion on this in the previous class, which is that when you're talking about issues here, I put a little asterisk here, that we should actually, this is not part usually of the framework discussion that you have, internationally. I have just added this because I think it needs to be talked about, and it will help you to understand also the ratio decidendi of the case. So that's also something that we have to extract from the case. And so in order to connect successfully to the ratio decidendi, okay, which is, where have I written that? Yeah. So the court's opinion on B is what will emerge as the ratio decidendi of the case. Okay. So therefore, it's important to also talk about the underlying issue. Okay. So there are two the issues. So when I say talking about the issues in a particular case, you have to state the issues at two levels. Okay, which is first is we are calling that issues prima facie in the case. Okay. Prima facie is primarily on the face, okay, on the face of it, what is apparent initially, okay, and because if you see somebody take out a gun and shoot somebody on the street, now it appears that prima facie he murders the other person. But if you have not seen certain facts before that part, where there was maybe the provocation by the other person, so that would provide a material fact. Okay, so those, but on the face of it, it looks like he committed murder. So that's prima facie, what appears on the face. But obviously, this means that on the face means that there is more. There could well be more to it. So this is not the entire. It's not likely to be the entire picture. Okay. So first we have a statement of issues prima facie. And then we have a statement of issues as a statement of an underlying issue in the case, right? So here, issue, I just warning about the pronunciation because obviously we are learning to speak French. We would like to speak like the people in Paris, not like the people in Mozambique. So the British pronunciation of this does not have the SH. It's issues, okay? Only S, issues. So whereas the Americans and the Indians and all, most of them say issues, okay, but this is just something to be aware of. Issues is the British pronunciation, issues. Okay, so here we have, we are talking about the underlying issue here, which is here. So first is the prima facie, issue prima facie, and then you have the underlying issue, which is the general underlying issue that is probably extracted. I'll give you an example and we'll figure out, it'll help you to understand better what is an issue prima facie and what is the underlying issue in the case. Right? So if you take this famous case, the Vodafone, this will help you also to learn about this case. All right. So if we write down the issue prima facie in this case is, so the courts, when they're writing, they don't write the issue like this. They just write one issue, okay? They usually write only this part because that's what they're concerned with. One of the elements of discipline that a court tries to follow is that they try to rule only on the particular controversy that is brought before them, okay? They try not to give, broad statements, okay? So therefore, they try to rule on the particular issue brought to them. And so the courts will only state this part. Okay, when you're reading judgments, historical judgments, you will only see this part stated in the judgment. This part will not be stated in general in the judgment. They will not talk about the underlying issue. You have to understand it for yourself. Okay, that what is the underlying principle that is being discussed here. Okay, what is the principle or what is the potential interpretation of the law that is being discussed? Okay, so you have to extract this for yourself. That's why I think it's an important thing to exercise for you. And it is also going to help you eventually to extract the ratio decidendi of the case, right? So therefore, this is why it's important. So let's look at this case, the Vodafone versus Union of India case. I'll just write down the facts briefly here. Okay, so very briefly, these are not exact. You can look at the actual decision in the case. You can go to Juris. We have a link to that earlier, based on a question from Merit earlier. This is where you have Juris. This is the link is provided in the document. You can extract the Vodafone 2012 judgment, Vodafone versus Union of India, and it's I think it's in January 20th January 2012 or something like that. January 2012 judgment, Justice S.H. Kapadia's judgment, where you can look at, so you can get used to extracting judgments from Juris. And this is an authoritative source of judgments, text of judgments. So let's look at the facts of this case, but I'll just give you the broad facts from what I remember. Okay, so the specifics may be wrong, and I'm not going to pretend to remember the value of the transaction. Okay, so let's say it's 4 million. Okay, $4 billion. Okay, this is how we write billion in foreign exchange markets. When we are indicating amounts, we write BO for million, MO for million. So 4 billion. Okay, so 4 billion facts is sale consideration for shares representing controlling interest in. We're not going to write perfect English all the time. So Vodafone. So the situation was that Vodafone, which is a UK-based telecom company, global telecom company, and these guys wanted to get into the Indian telecom business. So they wanted to do that by buying the shares of. They're basically taking control of the operating assets of an Indian company, which is this company was Hutchison SR. This was basically a company between a collaboration, a joint venture between the SR Group and there's a company, the very famous company in Hong Kong called Hutchison Whampoa, which is a trading company. So there may be some other companies in between in the layers of companies, but this is basically the idea: controlling interest in. So this is what the background is, the business background, where Vodafone wants to get to the Indian business. So, and these guys want to exit. Okay, so the Indian company is Hutchison SR. Okay. Hutchison SR. These guys want to exit the business, and these guys. Is there a better spelling? No, it's not really Hutchison and Hutchinson. It is Hutchison SR. Okay, so this is the business background. And these guys want to sell, these guys want to buy. So the way they do it is basically sale affected. Okay, there are some overseas jurisdictions. Okay, they're affected between. Okay, this was affected between two overseas, outside India, outside India holding companies, okay, which are located in tax haven. This is not really so important actually. Located in tax-friendly jurisdictions. Let's not call them tax havens. It's considered a dirty word now. Tax-friendly jurisdictions. So Ireland is a tax-friendly jurisdiction. Some people like to call it a tax haven. So Ireland, for instance, is facing a lot of problems in the EU. As a part of the EU, they have a 15% tax, or maybe they're even lower. I think maybe it's 11%. I'm not sure. And there's an allegation that they have all kinds of concessions they're making to all these giant MNCs like Amazon, Google, Facebook. To all the European headquarters of all these companies is in Ireland, because the tax is very, very friendly, business-friendly tax jurisdiction. So, the EU is alleging that it's actually they have given special concessions to these American companies, which violate the EU state aid rules, competition law rules in the EU. The governments are not allowed to give aid to their companies, to specific companies. So this basically they're saying is that the Ireland is effectively giving aid to these specific companies through special tax deals. So there's actually a judgment recently about 14 billion or something that Ireland has to collect from Apple, because the EU says that they have given them that much of a tax concession. So I'm not sure actually how it happened, what the final outcome in that is, but it's a reasonably recent decision actually. So maybe I think they're probably still fighting it out. So this is the point: is you're learning some things. You're learning all these matters which are important for international business. So remember, this legal aspects of business course. So everywhere we see an opportunity, we'll be connecting to business-related issues, and we will also be connecting to other, disciplines like accounting and things like that. So you should be comfortable with that. So you can see now this is a very common practice where you have holding companies located in tax-friendly jurisdictions, Cayman Islands, the British Virgin Islands. Okay, all these are they are almost no Bermuda. UK, you have Jersey, the Channel Islands. So all these kinds of jurisdictions So these two, the sale of the controlling interest of the shares representing the controlling interest, happened between these two overseas holding companies, one belonging to the Vodafone Group and one belonging to Hutchison SR. So initially, when Hutchison SR had set up this business in India, even then they had structured it in this way that they did not directly own the shares of the Indian company. They owned shares in the overseas holding company, and the holding companies held the shares of the Indian companies. All right. So this was the structure of the transaction. So Hutchison SR, when they wanted to sell the controlling interest in the Indian operating assets in the Indian company which owned the operating assets. So operating assets for a telecom company would be all the telecom towers and all the specialized telecom equipment that you need, premises, everything put together. So all that stuff you need to control it so that you can run the business in the way you want. All right. So when these guys wanted to sell to Vodafone, they thought that again, like we entered the business by coming through the overseas holding company. So similarly, all we are going to do is we are going to sell the shares which is being held by our overseas holding company to the overseas holding company. Right. So that was the structure of the transaction. So you understand now the structure of the transaction. So it's basically a kind of a mirroring kind of transaction that is happening. So it's just they're selling the shares between the two overseas sale and purchase transaction with the two overseas holding companies. And on the face of it, there is no action happening in India, but the controlling interest in the operating assets of the Indian company is changing as a result of this transaction. So the income tax department, these are the facts of the case. Okay, so the issue that came up in the case was the issue prima facie was, I will talk about the distinction between the issue prima facie and the underlying issue. Okay, so the issue prima facie was the tax department said, okay, so let's call them income tax department. Okay. And so in many tax judgments, you'll see that the income tax department is being referred to as revenue. You'll see this in Indian judgments and UK judgments also. Where they are being referred to as revenue. Revenue says this, revenue says that. But in certain types of cases, this is not correct because, this creates a little confusion because in certain cases, the issue is whether a certain type of expenditure is revenue expenditure or capital expenditure. And that revenue is a different revenue from this revenue. So it's better to call them the income tax department. But you should be aware of this, what the courts do. Okay, they refer to them as revenue. Income tax department. Income tax department basically, so the issue prima facie and the underlying issue will both be stated as whether. Okay. Right. So it is their claim. Okay, there should be an apostrophe as tax department's claim. That the above transaction. So this is an important case. So I'm discussing this with you. You should be aware of this case. Okay. Above transaction means this transaction that I'm referring to. Okay. Whether the above claim that the IT department is claiming that the above transaction, okay, represents, okay. Let me see if I can save some typing time. Or amounts to. Let's just use the amounts to. Amounts to a transfer of a capital asset located in India. Okay, this particular language is coming from the Income Tax Act. Okay, and there's a section, I think section 9 or something, to transfer of capital asset in India, located in India, which is basically saying that it will attract it will basically attract the provisions of section, I think 95 or something. It relates to deduction of tax at source, essentially. So whenever you're engaging in a transaction, I'll just briefly explain. Before I write this, I'll explain briefly what the contentions of the two sides was. The main contention of the IT department in this case is that you guys got $4 billion in sale proceeds, okay? You guys paid, actually. Vodafone paid. So these are the buyers and these are the sellers. Okay? So under Indian income tax law, if there is a transaction which is considered to be a transfer of a capital asset located in India, you are required, if you are paying, you're the guy who is purchasing, you're paying the purchase consideration of $4 billion, you are required to withhold tax at source. Okay? So it's tax deducted at source kind of law, requirement. Where so like here, if you pay certain amounts to a consultant, if your company is making a payment to a consultant, then they have to withhold certain tax at source. Okay, so it's a withholding tax requirement. So the income tax department's contention was that this transaction you did between two overseas holding companies actually is nevertheless, it amounts to a transfer of a capital asset located in India. So therefore the TDS requirements apply. Okay, so you should have actually withheld from this 4 billion, whatever the TDS requirement is, I don't remember the exact, it'll be some percentage, okay? Let's say it's 10% or whatever, okay? So 10% of this you should have actually retained. Instead of paying these guys this 4 billion, you should have paid them 3.9 billion. Okay, these numbers I'm just making it up, okay? These are not meant to be the correct numbers, but you get the idea. There will be some percentage. There is a sale consideration. You find out what it was by reading the actual case. And then you apply the percentage rule that is required for withholding tax, okay, whatever the percentage, 10%. So here I'm applying 10% to 4 billion. So the income tax department is saying that you should have not paid him 4 billion. You should not have paid 4 billion to Hutchison SR's holding company. You should have only paid them 3.9 billion, and that 10%. Okay, you should have held, sorry, not 3.9 billion, you should have paid them 90% of this 4 billion, and that 10% you should have held back, okay, and paid it to the Indian Income Tax Department as deduction of tax at source, okay, depositing the deduction of tax, basically withholding tax. Now, and then these guys would have claimed that tax as some kind of offset off or whatever. They could have pursued the claim with the income tax department. So then they started a case, these guys started a case against Vodafone. Why didn't you do that? Why didn't you withhold the tax and pay it to us? So the issue prima facie was whether the income tax department's claim that the above transaction amounts to a transfer of a capital asset located in India is correct. Okay. Now this is yeah, you could have stated, I could state this a little more elegantly, but this is basically it. Now you notice that above transaction will bring into the picture names of Vodafone, Hutchison SR. It will bring into the picture the actual amount of the sale. It will talk about the names of the two overseas holding companies, and there were many holding companies involved in a layered structure. Okay, all those names will be mentioned in the issue prima facie, and then we'll talk about whether this is actually a transfer of a capital asset in India is correct, and therefore, more importantly, actually, therefore, Vodafone actually owes this. I'm just going to call it a TDS amount because it's a smaller word than withholding tax. Whether this tax deducts a TDS amount to the ITD. Okay, this is what I'm talking about. Issue prima facie is highly specific. Okay, as it says here, the issue prima facie is intimately connected with specific case facts. Okay, and you can't usually transport that statement of issues prima facie to another case. Okay, because you can't take names like Vodafone and Hutchison SR to another case involving Airtel and or involving Nokia, etc. So you can't take it to those cases. So this issue is very, very case specific. Okay, the statement of the issues prima facie, okay, is very case specific. All right. So if we have this, so here if you don't want to, this is actually a judgment by S.H. Kapadia, who was the CJI at that time. Okay, it's a January judgment actually, if I'm not mistaken. anti-2012 tax law. This thing is still going on actually. This whole debate, dispute. The case decision has already come, but they're still fighting over it because the government didn't accept the decision. So here you have issue prima facie, therefore Vodafone. Yeah. So essentially the issue prima facie will be basically this, that whether Vodafone owes this TDS amount. So this is what I'm trying to give you a picture of. But in this kind of transaction, the statement of the issue prima facie, which is the pretty much the only statement of the issue you will find in the judgment, is the court will talk about, okay, here's what we are required to decide, whether the Vodafone owes this TDS amount to the ITD. Okay. Now, this is a surface, this is a statement of the surface issue. To decide this, the court will have to go into the question of whether this transaction amounts to a transfer of a capital asset located in India. Because if it's not, then this will not be, they will not owe this money, okay? Because they would not be required to deduct the withholding tax amount. So this is how it is. But generally, the issue prima facie will be very, very highly specific and will be a surface level issue, okay? Now, when it comes to the underlying issue, which you will have to extract yourself, in this case, what we would say is the underlying issue, the statement would be something like this. So whether the transfer of enough shares, I've split it up to help you to understand the specific issues that are involved. Okay. Whether the transfer of enough shares in two overseas holding companies, okay, to effect a transfer of controlling it. What is the transfer? Transfer of enough shares. Okay. Because you need enough shares to get the controlling interest. So, between who? Between two overseas holding companies. And what is the objective, or what is the effect of the transaction? To effect a transfer of controlling interest. Okay, this is the result of the transaction. Okay. And controlling interest in what? In the operating assets. Operating assets of what? Of an Indian company, which is Hutchison SR. But in this case, we're not going to mention Hutchison SR because we're not talking about the underlying issue. We're trying to state the issue or the controversy in the case at a sufficiently general. The objective here is clearly to state the issue at a highly specific level, surface level, whether Vodafone owes this amount of money to the income tax department. This is what the fight is about. Okay, income tax department saying you guys owe me so much money. These guys are saying, no, we don't owe you any money. Okay? And they come to the court. So the court looks at the surface dispute and states this as the issue prima facie. They may not even actually state all this. They may just state this one. That's why I put it in bold. Okay? They may just state this one. And that's all you see in the judgment. Now, you have to use your brains and figure out what is the underlying principle that they are actually debating. Okay, there is a certain principle. So the income tax department is seeking to apply a certain type of principle or interpretation of Indian income tax law, and the Vodafone is trying to apply a certain other type of interpretation. And those are actually general type of positions. These are not specific positions. Those are positions that represent kind of general principles. Okay? So that's where you have to get down to the general principles and understand what is the underlying controversy. Okay, what is the underlying issue being debated? Okay, so the issue is whether the transfer of enough shares here. Okay, when you have any such general transaction, you notice there's no mention of Vodafone or Hutchison SR. Okay, there's any transfer of shares into overseas companies like this. Okay, whether this amounts to a transfer of a capital asset located in India. Okay, you could actually state this even more generally because this statement, this part in quotations, this is coming from Section 9, I think, of the Indian Income Tax Act. Okay, which is therefore it's taken from Indian income tax law. You could even state this at an even more fundamental level if you wanted to apply this in an international context in other countries. As a general principle of international taxation, okay, you could even say, instead of using a restrictive language from the Indian Income Tax Act, you could rewrite this as saying, okay, let's say, amounts to let's write this also actually. Then you'll learn about different levels of abstraction. In this Glanville Williams article, which you are expected to read, okay, So earlier, I think somebody asked a question, Sheena asked a question about how much you're expected to read or whether you should read only the notes or you have to read a textbook. The answer to that, I'm just repeating again, is that you're only expected to read the notes that I give you and only the material that I discuss in the class in general. Unless, of course, in the case of the Glanville-Williams article, where I'm telling you, you've got to read the entire article. Okay, I'll leave out one section. I'll just make it, that's a little difficult, the topic. I'll just make that clear at this stage. That you can leave out this part, okay? Yeah, so I've already written it in the document, okay? So this element, there's something called sub silentio, okay, which is a slightly complicated concept. So I'm not going to insist on you covering this. But unless I've covered something, written something as optional, and I've told you, so I'm not going to handhold you and cover this article with you. Okay, you're going to read the stuff, and then if you have any questions, you have to ask me. Okay, otherwise I assume that you have understood everything that this article says. Okay. It's not a very well-written article. Actually, the sequencing of topics could have been better, but it's what we have, so we'll just make you read it. And anyway, you have to get used to ideas. Many articles will not be well-written, but you have to follow the train of thought. Okay, so let's try and say, so in this article, he talks about the idea of levels of abstraction, okay? That in order to extract the ratio decidendi of a case, you will have to go through different levels of abstraction, okay? And until you come to a certain level of abstraction, and then you stop, because then you're becoming too broad. Okay, so let's try to state this even at. So first, let's get the Indian context right, and then we'll take it to a next level of abstraction. So if you wanted to apply it only in Indian context, the underlying issue is you would say this: whether the transfer of shares like this, okay, in this kind of transaction, whether it amounts to a transfer of a capital asset located in India, and we can state this and gives rise to a liability. So here you get used to all the language of the courts, how language is used in judgments, because that's part of the important aspect of studying business law. You have to get comfortable with this kind of language. Many of you are actually maybe weak in English comprehension. I'll give you some tips later on what you have to do, but you better make an effort to read some important judgments. I'll give you some tools later on, and try to improve your English comprehension also, because it will affect you later on in your working life, where you must have good English comprehension. And reading judgments is a very good way to train yourself. So give rise to a liability. You see how language is used. Okay? Gives rise to a liability. Liability. Who has the liability? Okay. On the part of the transferee. Is it the transferee? Once the shares are being transferred, yeah. So transferee, okay. Okay, in this case, it's Vodafone. I'm not going to write Vodafone because I'm not talking about a general underlying issue. It's a transferee. So please remember, in this transaction, learn two more terms: transferor and transferee. What is happening in this transaction? Shares representing controlling interest in the operating assets of the Indian company in Hutchison SR. Okay, maybe the name is slightly different, but this is approximately it. So these shares are being transferred between two overseas holding companies. The company representing the sellers, these guys, is transferring to the company representing the buyers, which is Vodafone. Okay, so buyer is the transferee in this particular case, because what is being transferred, the subject of the transfer, or the object of the transfer is the shares. Okay, the shares are being transferred, and is being transferred by these guys to these guys. So these are the transferors, okay, and these are the transferees. Okay, just like a drawer of a check and a drawee of a check. So transferee, so whether gives rise to a liability on the part of the transferee, okay, to deduct, okay, withholding tax, right, from the sale proceeds, okay, from the gross sale proceeds. This is the kind of language that we use. Gross sales proceeds is gross, and then you have, if I have a full gross sale proceeds, would be in this case 4 billion, and then 90%, 10%, 90% of that is 10% of the withholding tax, and 90% of that would be the net sale proceeds. Okay, So essentially, it gives rise to a liability on the part of the transferee to deduct withholding tax from the gross sale proceeds and pay it to the income tax department. Okay, I'm just not writing proper English here to save time. Right? So it's a statement of the underlying issue at the Indian level. Okay, you can make this even more abstract by saying, now making it even more abstract by saying that instead of this, you can replace this by saying, in the jurisdiction where there is where the operating assets are located, okay, whether it gives rise to a taxable transaction in that jurisdiction, okay? Whether basically this kind of an indirect transfer, which is called an indirect transfer, which is still not a good term, but the courts have used it, indirect transfer, by transferring the controlling assets and the shares between the holding companies, transferring the shares so as to transfer the controlling interest in the operating assets. Whether this effectively means that it is to be treated as a transfer of the operating assets. Okay? This will be even more specific, even more general, and it can be applied to countries outside India as well as a general principle of international transactions, of international taxation. Okay, so underlying issue first, but let me write this once again so that you have a reference point and you just don't remember what I said. Okay, so underlying issue is here. This is the part which is the Indian tax law language. Okay, so we're going to wipe out this language in the next part. Okay, underlying issue here, write it for stated for the Indian context only. So they should be the Indian context, but in many cases I'm not using proper English to save time. Stated for the Indian context. Okay. Here the underlying issue is like this. Okay. Here, what are we talking about? The underlying issue. Okay, stated for underlying issue stated for Indian context only. Now we can have this stated at an even more. You have understood the transaction on the underlying statement of this. Stated for even broader So first, let's understand Indian context. We take out the underlying issue statement for the Indian context only is general principles, whether the transfer of shares in these two, what does it do? It transfers controlling interest in what? In operating assets in who's operating? An Indian company. Okay, the Indian company under the Indian Companies Act. Now, whether this amounts to, okay, save some space, amounts to what? Okay. So I'm putting all these dashes. These are not meant, normally you would not write like this, but I'm putting the dashes for you to understand this a long complex sentence. So I'm breaking it up into what we call the ingredients. Okay. Amounts to what? A transfer of a capital asset located in India. Okay. This is the language of the Income Tax Act, which attracts the liability. Gives rise to a liability on the part of who? On the part of the transferee. In this case, it's Vodafone, but we write it in general. Liability to do what? To deduct withholding tax from the gross sale proceeds and pay to the income tax department. Okay, this is a statement for Indian context in general. So this, if you state it like this, whatever the decision of the court is in the Vodafone case, you can now apply this to future cases between, let's say, Nokia has some transaction. Maybe Nokia bought a factory from somewhere. Okay, or maybe Microsoft is selling the Nokia factory to somebody. Again, they may do it in the same way. Okay, so whether the same issue, if you state it like this, it can be applied. The ruling of the court can be applied in the future to similar transactions, okay, between other companies, okay, because it does not involve the statement of Vodafone, etc. it does not involve the name of Vodafone, etc. Okay, so it's a general principle. So you understand this as a general principle. Now we can make it even more general and transfer it for state it as for international, international tax law principle kind of a objective here, to state the international underlying issue as a principle of international tax law. Okay, if you want to put it like that. Okay. In that case, you would say you would take out. You basically want to now strip out this language, because this language is specific to the Indian Income Tax Act. It may not be there in the Australian Income Tax Act or the UK Income Tax Act. So you want to write more general language which can be applied anywhere in the world. Okay, so now you say that so now you're going to a higher level of abstraction. Okay, one level of abstraction already from the issue prima facie. Okay, same transaction you're talking about, but you're now trying to identify underlying principle. Okay. Then you state even more broader whether the transfer of enough shares. Yes, somebody had a hand raised from room number 104A. Do you have a question? Okay. So underlying issue here is whether the transfer of enough shares between two, do you understand the transaction? Okay, transfer of in the operating asset. Oh, now we won't write Indian of this company. Okay, we'll write transfer of enough shares into overseas. Now we'll not write outside India. You have to understand what overseas means. Okay, holding companies to effect the transfer of controlling interest of a, let's call it a local company. Okay. Local is a general term, so if it's a UK tax matter, then UK local will be UK. It's an Australian tax matter, local will be Australia. Okay. Overseas holding company, that is. Now here overseas will have a different meaning. It will mean not local. Okay. Because the other term we are using is local. Okay. So when we apply it to India, India is local, and anything outside India is overseas. We can apply it to UK, Australia, Canada. Now, even broader, so transfer of shares between two overseas, that is not local holding companies, to effect a transfer of controlling interest in the operating assets of a local company. Okay. Amounts to, okay, let's say yes, Isha, you have a question? All right, okay, amounts to let's write it this way. You see, I'm trying to write the underlying issue as a general principle. Amounts to an effective transfer. Okay, effective means in the eyes of the tax law, this will be seen as an effective transfer. Okay, amounts to an effective transfer of of local assets. Okay, you write it at local assets. Okay, or of assets belonging to transfer of assets belonging to entities incorporated locally. Okay. And okay, so the withholding tax provisions are the same for every country. Okay, the question is whether the transaction is such that it gives rise to a withholding tax liability. Okay, so generally, if the principle is that if there is a transfer of assets belonging to entities which are incorporated locally, or there is a transfer of assets which are, essentially deemed to be local assets. Okay. And then it will give rise to some kind of a withholding tax liability for the person who's paying the sale consideration, that is the transferee. Okay. And therefore gives rise to a liability on the part of the transferee to deduct withholding tax from the gross sale proceeds and pay to the local IT department. So now we have used the word local and made it even more general. It is not the Indian Income Tax Department, but it is the local income tax department, and we have removed the word India from here. So this is an even broader, even more general statement of the underlying issue. When you have any kind of overseas transfer of shares, where the shares are representing controlling interest in the operating assets of a local company. It's a very common. Yes, Sanchit? Sanchit, you have a question? Yeah, maybe your audio is not working. You can put your question in the chat box if you can. If you want to, you can put it in the chat box. Okay, I'm not able to hear Chanchit. I hope other people's audio is working. Palak, can you hear me?
Yes, sir.
Okay. So then there's some problem with Sanchit's audio because he has
Maybe so.
yeah, he's not able to ask the question, but he's raised his hand. But it's okay, fine. We'll wait for him to get his audio back. Okay, so you see here, there's a more general statement of the underlying issue. It can be applied to any country in the world. Okay, whenever you have local assets. So generally, the principle of withholding tax is that there's any kind of a sale purchase of local assets, you have to deduct withholding tax and from the sale proceeds and pay it to the income tax department. So there is a chat message. Let's look at it. Can we use domestic instead of local? Yes, we can use domestic also. So it's a good point by Sanchit. Okay, we can use domestic also. Yeah, that would be even better. Domestic you can use. Then the better term would be overseas. Would you can replace it by international, but overseas is better. But you can have local, domestic. Okay, so that's a good point by Sanchit. Okay, you can have a local domestic company. All right. So contrasted with international or overseas. All right. So you can see now this is the general principle in tax law internationally, that if you're playing around with assets located incorporated locally, okay, then if there is any kind of sale, you should obviously generally there'll be some principle, and the tax rate will be different from different countries. But there will be in many cases there are rules on withholding tax. So you have to, before you pay, just like I said in India also, if you pay some money to a consultant from your company, you have to deduct TDS and then pay it to him. You can't pay him the full amount of the consideration. So so this is basically a rule that exists everywhere. Now you've stated it in such a general way that it can be applied as a principle of international tax law, although the ruling will be by an Indian Supreme Court. But even that could be a persuasive precedent in an international tax dispute, okay, which is not in India. So in India, it will be a binding precedent, but in other countries, it could be a persuasive precedent. Okay, so this is basically what we mean by it's an important discussion actually to understand this transaction. Okay, and a very important transaction. And as I said, it's still going on. The ripple effects are still flowing through the system, and the government has not accepted the decision. And they actually changed the tax law immediately after this decision. And if you look at the language of the 2012 Finance Act, it's as if the guys who were drafting that 2012 that part of the 2012 Finance Act, they were actually looking at they took the judgment by S.H. Kapadia and they looked at line by line. Wherever the court says this will apply, they have changed the law subsequently to say this will not apply. Okay, so therefore, it's a pretty sorry affair actually from an international, from a PR point of view for India. If you're thinking about promoting India as a business-friendly jurisdiction for tax matters, etc., and generally as a business-friendly jurisdiction, which we need to do to attract foreign direct investment. We have a lot of infrastructure needs, etc. So we want to make this a good country attractive country for FDI. So this is not a good thing what is happening actually right now, because the government is, first of all, the government reacted very badly to the decision. Okay, immediately they changed the law and effectively nullified the decision. So this is not a good thing. It doesn't look good actually. Even Narayan Murthy criticized it. Many people criticized it. And he said that when the Supreme Court has given a decision and then you go and change the law to nullify the effect of the decision, it's not a good thing, which many people agree with. And this thing is still going on actually. So the change of government from this happened during the UPA years, obviously. and Pranab Mukherjee was the finance minister when this Finance Act was written. And of course, now even the BJP government is still pursuing this matter. They want to extract this money from Vodafone. So the change of government has not helped Vodafone in this matter. And so this is generally not a good thing, because I remember Pranab Mukherjee said at the time that when they made the changes in the Finance Act, Pranab Mukherjee said that there will be an outflow of funds from the exchequer if we don't make this change. Now, if you apply that logic, then the tax department should not pay any refunds, because refunds represent an outflow of funds from the exchequer. If you really extend that logic to its extreme, then every one of us should pay 100% tax on income, because that will maximize the inflow of funds and minimize the outflow of funds from the exchequer. Okay, so this is not a logic. Actually, you have to think about first of all, you have to think about whether what you're doing is in principle correct. Okay, because we are not. This is not some fly-by-night operator, mom and pop shop we are running somewhere. This is a big country. You're talking about the welfare of millions of people, and you have to have general principles which are considered fair by everybody in the world. You don't have to be. We don't have to give them special concessions. Okay, I mean, you don't have to let them pay no tax, but the tax law and the rules, etc., should be applied in a fair manner, and they should not change from day to day, because the certainty and all is important, as we discussed, for animal spirits and all those things. These are all real issues which affect, and it connects back to our discussion on the on the tax on book profits, okay, system also. All of this is connected at the end of the day. Why are we doing many of these things? It's about making India more economically prosperous, okay, because the welfare, all this, you can talk fancy, you can give fancy lectures about all this, we are going to do social justice and all that. At the end of the day, if the government doesn't have money, what social justice are you going to do? So therefore, even to run a welfare state, which we still seem to want to do, which is, I guess, not a problem. It's not a problem to take care of people who are in a disadvantaged position, but you've got to basically have the money coming in the first place. So you've got to have business-friendly policies, so the economy is vibrant and the government is collecting a lot of money in tax proceeds, and then you can do some social justice matters using that tax money. You don't even have any money because you're not producing a sufficiently strong economy, because your policies are all messed up. And so what's the point of talking about social justice? So these are some of the things that our country doesn't seem to understand. And whether you change from Congress to BJP doesn't seem to make much of a difference, because the general thinking of everybody is very socialistic in this country. So it's a very tragic situation, actually, and it's most tragic for you guys who are young people. You have your entire life ahead of you, and you're not able to live in a sufficiently prosperous economy because the policies are being, policies that are being followed are not wise. Okay. So anyway, so this whole thing is, again, somebody could say, what is the connection between all this? But I think these things are important. You have to understand the connection and how it all connects to economic prosperity. Okay. So this is what happened in that particular case. Now you can see how the issue can be stated. It's a very important case. Okay. And because it brings out these issues also. That's another reason why it's important. Okay. And so if you see here, so therefore we have stated the issue. First is issue prima facie is very specific. They look at the particular controversy because they're fighting about some amount of X amount, let's say X crores. Does Vodafone owe X crores to the income tax department? That was a statement of issue prima facie. Then we go more general at the India level. Okay, then we link it to capital asset located in India. There's a language of the Income Tax Act, and whether this is actually treated as a transfer of a capital asset, amounts to a transfer of a capital. Then we go even more general, and we state the underlying issue, that principle of international taxation. Okay, as Sanchit correctly mentioned, that this is, we can contrast between a domestic company and an international overseas holding companies, okay, which transfer, and then whether there is a transfer, if a de facto transfer of the locally and domestically, as he said here. Another chat box message. Yes, Tanuj. Yeah, so there's some problem with the power cut since morning. Okay, right? Yeah, fine. Yeah, whatever. There's some. Why does Delhi have so many park cuts? I don't understand. We are sitting in. I don't understand. But anyway, yeah. So yeah, whatever you have, if you have a problem like this, you can mention it to me. Yeah, that's fine. Yeah, I noticed. I mean, there's a lot of complaints about park cuts. I mean, when I was growing up, West Bengal used to be the state which had park cut problems. And you are sitting in Calcutta, we don't have any park cut issue. And in the capital city of New Delhi, we have so many park cuts. I keep hearing about park cuts. It's quite amazing, actually. I don't know why this is happening. Okay, maybe Sanjeev Goenka needs to take over Delhi electricity generation and distribution also, because they're doing a pretty good job in Calcutta. So maybe you should you should transfer the operating assets to Sanjeev Goenka Group. Okay. So let's look at this. So now you see the broader statement of the issue. Okay. Here, even more generally, okay, where Sanchit made an interesting, important contribution, changed the language to domestic, alternative language to domestic. Okay, so now you see this. Okay, so this is basically the statement of. So we have spent a lot of time on this, but this is a very important case, and you need to understand how to state the underlying issue in a very, very general way. Okay, generally we will connect it only to an Indian level. We will not take it to the next level. Okay. So generally, when we talk about underlying issue in the cases we discuss, we will talk about it from an India context. Okay, but it's still more general than the particular case. Right. So India context or local context. Okay, a domestic context. Okay. So because many of your cases are going to be based in the UK, so then we'll talk about a UK context. Right. So there we have that. Okay. So this is basically where you see. And another statement I would make about this, if you see about this particular case. Now here, if you go back to this kind of a drawing framework here, you see that in under the application part, the A is for application. It's the same for both. Okay. Under application, I've written formalism. L is for legal formalism, and realism. Okay. Now, this is where, when the law is being applied, this is where the formalism and the realism comes into play. Okay, that is, these are the jurisprudential philosophies that the judges subscribe to. Whether they are, in a formal, whether they, explicitly talk about it, generally they don't. Okay, but you can see it happening. Okay, so therefore it's important. That's why I discuss these matters with you. Because these principles, these philosophies that the judges subscribe to, it's important to be aware of them and be aware of the implications of these kinds of rulings for business certainty and all those, again, affecting animal spirits, economic vitality. So you'll see here that in this case, you'll see that in the Vodafone case, Justice Kapadia's judgment of the Supreme Court, which actually these guys lost in the Bombay High Court. The Bombay High Court actually did not apply a formalistic. Bombay High Court did not apply a formalistic ruling. Okay, now I don't know what has happened because the 104A, the room seems to be empty. Okay, and I don't know what has happened here. But anyway, so we'll talk to Neeraj about that later. But let's look at this decision by Justice Kapadia. The Bombay High Court, where Vodafone actually lost, okay, the Bombay High Court essentially did not take a very formalistic view. They said that yes, they ruled in favor of the tax department, and they said essentially that this amounts to a effective transfer of a capital asset located in India. So therefore, Vodafone actually owes this TDS amount to the IT income tax department, because this is what they were trying to do, indirectly transferring the capital asset by transferring the shares overseas, and they were trying to avoid tax by doing this. If you notice, actually, the reason I say that many people in this country have a very socialistic mindset, we actually have, there are many people in India who thought that Vodafone should have paid tax on this transaction, because they said, we need taxes and all kinds of things. We also had one of our law teachers actually who said, who was teaching us this case, and he said, in Hindi, "Kya Vodafone itna bada company hai? Kya ye paisa nahi de sakta hai?" But that's not the point. This is not the point. You have to see whether you have to apply a highly formalistic approach. I mean, I believe in formalism because of the benefits we discussed. You have to apply a highly formalistic approach and see whether there are liability as whether it actually gives rise to a liability, okay, to pay the tax, whether there is such a transaction which is a transfer of a capital asset and gives rise to a liability. You can't say that, of course, they can afford to pay the money. They have a lot of money, but that doesn't mean that you're going to extort money from every company that invests in India. So this is basically that the Bombay High Court ruled in a manner which was not very formalistic. They said that essentially they're trying to avoid tax. And so Vodafone lost the case in the Bombay High Court. And so the Bombay High Court applied more of a legal realism kind of an approach, okay, but certainly not a formalistic approach, okay. And then they ruled it against Vodafone, and they said that they should have to pay tax because the effective. They tried to look through the surface of the transaction here between the overseas companies and said, what is the purpose of this transaction? The purpose is to transfer the controlling interest of the local operating assets, and therefore this should be treated as a transfer of a capital asset located in India. And when it came to the Supreme Court, so the Justice Kapadia's decision, which I consider a very good decision, actually, very formalistic, because these are the kind of decisions we need to, promote India as a reliable, tax-friendly, business-friendly jurisdiction where we will apply rules in a very formalistic manner. Okay. So what he did was basically he looked at this decision and said that this transaction and said that this is not a transfer of a capital asset located in India because the assets that were transferred were actually shares which were held by two overseas holding companies. So these two overseas holding companies are transferring shares between themselves. How can it be? We have to look at the surface transaction only and look at the what is actually happening and apply the law very strictly. Transfer of a capital asset located in India. Okay. So it talks about, therefore what he said was what was being transferred was shares which are held outside. These overseas holding companies were incorporated in overseas jurisdictions, and therefore it has nothing to do with India. There's a transfer happening overseas. And he also mentioned too, it's a very important part of the judgment where, we're talking about being very formalistic and also thinking about the connection between, economic policies, foreign investment, and the way that tax laws are interpreted. And he also looked at the business conventions. Okay, so he said that if you look at internationally, this is how companies do business. When somebody's investing when a Hong Kong company is investing in, say, Vietnam, they don't go directly buy, companies. If they find somebody holds a Vietnamese asset, they will do a transfer between overseas holding companies of the controlling interest of the shares. This is how normally international transactions are done of this nature. So there is nothing unusual about what Vodafone did. They were using normal international business convention. And therefore, we should not see it as a attempt to evade tax. And this will also have an impact. He did mention actually also about when companies are coming to India to invest. We have to also look at the impact of rulings on what it will do to the desire of international companies to invest in India. So these, in a way, he was taking a consequentialist view also, that if we rule in this particular manner, this will have a certain negative impact in terms of investor sentiment and all that. But mainly it was a highly formalistic decision, which is in line with, I mentioned to you earlier about the English courts. The English courts, one of the reasons why English law is so popular around the world, that a Hong Kong company doing a transaction with an Australian company will say that this transaction is to be governed by English law, and any dispute is to be settled in the courts in London, in the UK. Okay, so why do they do that? Because the English courts are well known for being very, very formalistic in their decisions, and they are very respectful and deferential to international business conventions. Okay, so they're very cognizant of how the actions of the judiciary in the way they rule on cases is going to affect business sentiment, and it's going to affect certainty. It's going to affect animal spirits, etc. They're very conscious of all these interlinkages between the different parts of a country's, government operations and the economy, etc. It's a very important thing, I think. Very important principle. It's good to be aware of that. So another thing I want to mention is how Justice Kapadia's judgment in this particular case is an example of formalism. Okay, and it shows you once again how these ideas like formalism, realism can be brought into the application part of the of this particular framework. And then you have this. Okay, so here we have this coverage of this issue. So I've spent a lot of time on it, but all the things I've said are important actually for your learning, because it's a business law course. You have to understand the business connection everywhere, and also connected to our broader economy, issues of economic development, okay, the role of government, etc. All these things are all connected. So we state the issue at two levels: issue prima facie and issue at the underlying issue, which is the general principle, okay, which is being discussed. So that can be applied to the to other future cases based on the decision in this case, and then you can look at so what I'm saying here, the underlying issue, which can be applied to other cases, and that basically helps you to understand the here when you're looking at the underlying issue part. When you state the underlying issue, the decision of the court. Once you've identified this, when you look at the decision of the court, it makes it much easier to identify the ratio decidendi of the case. That is what was effectively held in the case, right? So in what way was the underlying issue decided? That connects to the ratio decidendi, right? Okay, here we have, okay, so now we have, what is this? Sorry, where was I? I got distracted by actually what is happening in 104, 103, then 104. Oh, this is 104A. Yes, what's happening in 104A? I see a bag there, but I don't see any students. Okay, so we'll have to deal with that. I can't hold up the class for that enforcement issue, but we'll have to get into that later. Okay, so we try to cover this a little bit, cover a little bit more material here. So this is what's connected to the ratio decidendi of the case. This will become clearer. Please remember, everyone, that if you're not paying attention now to everything that is being taught, I'm going to be quizzing you later on. Once we are right now, we are just warming up. Once I get into the coverage of cases, hopefully pretty soon. Then we will have many sessions on Viva-based quizzes, which will affect your grade. So you will be asked on whatever I've discussed in the class. Okay? And people will be caught randomly and asked. So you better and please form your groups also. I've not asked you because I've not got into that stage yet. But once we get in, we'll be doing them quite rapidly. We'll have many sessions in succession. So please be prepared for that, okay? So look at all this. We've done all this discussion, okay? So this brings us to the next topic. So this is the case analysis framework, which you have just finished, okay? So this can be, you can apply this when you're reading judgments by courts, okay? So on historical cases, actual cases, decided. You could also be applying it to actual cases which are not yet decided finally by the courts, and you could also apply it to hypothetical cases. Right? So it's a framework that can be applied in many kinds of situations. Okay, many different kinds of situations. So let's go on to our next topic, which is, as you can see here under the topics, I think it will be there in topics. So next topic is under case, the next acts, rules, and regulations. So just something to be aware of, okay, which is that you have this, okay, which you have this, there's a term called Bare Act, okay, which we use. Now, Bare Act, the way the lawmaking process works is that you have these terms in acts, rules, and the law is made by the legislature. Okay, this is what we call the Bare Act. Okay, bare means it's bare, it's alone. Okay, it's stripped of the rules and the regulations. So, law, for instance, the Income Tax Act is a law made by the legislature. Okay, from 1961, the latest version of the Income Tax Act in India. Now, this does not include the Bare Act when you're referring to the Income Tax Act or any other law made by the legislature. It does not include the rules and regulations. Okay, so this is what we call the Bare Act, okay, the law itself. Okay. Now, without the rules and or regulations, okay, rules and regulations. So the rules, there are two different terms. Some people say they're not no different from each other, but actually there is a difference. So the rules are made by what we say income tax rules, for instance. These are made by the Central Board of Direct Taxes, which is basically, I've called it closer to the de facto head of the executive branch, which is the PMO. Okay? De facto head is PMO. De jure head is the president in India under the Indian framework. Okay, so if you see the CBDT, for instance, on the income tax rules, the CBDT is much closer to the executive branch. Okay, that much more under the control of the finance ministry than say the people who make the regulations. These are made by statutory bodies. So like let's say the RBI. Okay, these guys are these are called statutory bodies because they're set up by statute. There's a SEBI Act, there's a RBI Act. Okay, there's the Insolvency and Bankruptcy Bureau of India Act. These are all IBBIs. So these are all called statutory bodies. Now, these are also part of the executive branch technically, but these are slightly more removed from the de facto head of the executive branch because they're a little further away. So the PMO does not exercise day-to-day control over SEBI. Okay, so because SEBI has its own rules and regulations, it's a little bit more removed. Okay, so from the PMO. So these guys, when they make up something like rules, these are called regulations. And what is made by the rules, they're made by the Central Board of Direct Taxes. Okay, those are called rules. Okay, and the others are called regulations. Right, so in the case of the Companies Act, so the BEAR Act will be the Companies Act. Okay, and then the rules will be made by the Ministry of Corporate Affairs. Okay, and then the regulations will be made by maybe various other kinds of statutory bodies who make rules with regulations with respect to. Some will apply to companies as well. So those will be called regulations. Okay, so that's that as far as that is concerned. Okay, that's your second topic for today actually. And then you have another topic which is types of jurisdiction. We talked about types of jurisdiction. Okay, pecuniary, territorial, subject matter. Very simple. This part is really like a textbook actually. There's not much thing to explain. I'll just briefly cover it. You have pecuniary jurisdiction means relating to monetary amounts, okay, which is right, range of amounts for which, so like you recently had a controversy, remember? They had, I think, raised the amounts. Like this is amount, like let's say if it's 2 crores, then up to 2 crores you have to cover in the district courts. You have to file the matter. If the claim is up to 2 crores, I don't remember the exact amount, but I'm just giving you an example. So every jurisdiction will have certain rules like this. Okay, so up to 2 crores you have to go to the district courts, and above that you have to go to the high court, to the high court, things like that. So these things change from time to time, not on a regular basis, but sometimes. And so this is basically what it means. So pecuniary is relating to monetary amounts. And so what is the amount that of claim that a particular court, a district court, high court, etc., is allowed to hear? Okay. So this is what pecuniary jurisdiction. Now, here you have, in the case of criminal cases, they relate to quantum of punishment. Okay, so for instance, a sessions judge can issue a death penalty, but a judge at a lower level, I'm forgetting, briefly blanking out on the name, basically at the lower criminal courts, below the sessions court, they can't issue a death penalty kind of verdict. So this relates to quantum of punishment in the case of criminal cases. That would not be called pecuniary, of course, but it's a parallel kind of concept. Territorial jurisdiction refers to the power of the court to. So if you have a murder that happens in Pitampura, then a similar case where murder is happening in Pitampura, the GK2 police station can't inquire into that. That has to be looked into by the Pitampura police station. Okay. So territorial jurisdiction where the what should we call the controversy first arises, okay, the matter in dispute, what we call the cause of action. Okay, this is called a cause of action. The cause of action arises. All right, that's where you go for territorial jurisdictions based on where the cause of action arises. So that's why territory. And then you have subject matter jurisdiction, which is basically your where you have so income tax matters have to go to the income tax tribunal. Rent control, the Delhi Rent Control Act has to be filed before the rent control. You can't file it in a Delhi district court. Okay, that's not allowed. This is talking about subject matter jurisdiction. Okay, so this is basically different types of jurisdiction that's based on the subject matter of dispute. So you have three types of jurisdiction: pecuniary, territorial, and subject matter. Okay, so generally the principle is that if it's a let's say a rent control matter, and some Delhi district court has passed a judgment on that, that judgment has no value actually. It's called a nullity. Where the court did not have subject matter jurisdiction. The Delhi district court does not have jurisdiction. Jurisdiction lies with the rent controller. So then you have also other types of jurisdiction: original and appellate jurisdiction. Okay, original jurisdiction means if you look at the high courts, based on the amount of claim also, the high courts will have original jurisdiction. Certain cases can be brought first for the first time in the high court. And the high court also has appellate jurisdiction, that is to hear appeals from the lower courts. Okay. So Supreme Court also has original and appellate jurisdiction. Okay, so Article 32 is original jurisdiction of the Supreme Court for invoking fundamental rights, but mostly they deal with appellate jurisdiction, which is on appeal. Then you have, so this is basically this, and this is another. So these are all very textbook kind of topics. Okay, you can read them yourself. There's not much for me to cover. Okay, and then you have, you can see all this curative petition, all that. And so the general thing about appeal is that it's basically this statement we make about appeal being a creature of statute, okay, which I will just check if, so there is no appeal unless it's given in the statute. This is a principle you have to remember. You don't have generally a right to appeal, okay. So here you have this, I'm trying to see why this alarm has not, okay, I forgot to set the alarm, so I am 1 minute over the 3 p.m. deadline. Okay, so you guys are dismissed, your class is dismissed. And if anybody has a question, they can stay back, but the rest of you can leave. Okay? So we also have to get into this matter of what actually happened in